The last thing I wanted to talk about was the interest rate. Was the FOMC? It wasn't the FOMC. It was basically you had Powell. This is important. I know it's very like TradFi kind of thing, but you can't disaggregate the Fed monetary policy from the price performance of crypto, including Hex. We all thought there was this possibility that Hex was decorrelated. It's maybe sort of decorrelated, but it's not, like, in the sense that it's not going to move directly in tandem with Bitcoin and Ethereum because most of its liquidity is in USDC, the Hart's Law thing. But when there's less money in the system, you're not seeing all-time highs, when interest rates are 5-6%, in my opinion. But I guess if that changes, we're not going to know if that could happen until it happens, but it seems obvious. Basically, you had it was really in line with the cycles, which is a little bit weird, but when the Fed decided they were going to raise rates, that's when, crypto and stocks started going down. And the Fed matters. There's a reason why everyone tunes into the Fed. But there is sort of good news. There is sort of good news with regards to the Fed. I guess we'll start off with K4K's tweet because K4K is awesome. So please follow at K4K Crypto. I'm sure you are if you're watching the show. But he said Fed Chair Powell said they could start as early as December to start reducing increases in rates. This is good. It's very good. Retweet that. Please like and retweet that. But that is big. The first thing that I thought when I heard that was people are thinking, oh, but the rates are going to still going to start going up. But it's very interesting. So when Bitcoin was at the top, that was when the Fed, they didn't start raising rates, but they started decreasing the amount of money that they were putting in the system, like for quantitative easing, basically just injecting cash, to stimulate the economy. They were already starting to pull back on the amount they put in every month. And that's what started the top. And now that was completely in line with the top in the 4-year cycle. It was pretty much exactly on time. It was within that window of when Bitcoin was scheduled to top. So now we are in that period of time when Bitcoin is scheduled to bottom. And we obviously know that past performance is not indicative of future results. But it is interesting that during this time when crypto is supposed to be bottoming, you have the Fed, hinting or telegraphing that they are going to start slowing the rate at which they raise rates, because there is some sort of top in inflation. Inflation's starting to go down. And this is interesting. Pulse Max. Shout out to Pulse Max. Just give that a like. But there's a chart right here. So 1969, Fed pivots. There's consolidation, goes all the way up, all-time highs. 1973. Consolidation. Fed pivots. Market's going down a lot. There's this consolidation down in a short period of time and then back up. It wasn't all-time highs, but then you made all-time highs. This is the 80. This was high inflation. Fed was raising rates, pivoted, consolidation, and wow, that's a crazy run after that. I mean, there are some tops, but we go here. We don't have to read every single time. But I remember when they were raising rates in 2019 and the market went down, and then they started cutting it. And now you have the Fed's pivoting 2023. So are we going to have that same sort of, not consolidation, capitulation? I was saying consolidation is capitulation, where there's a strong wick down and then we never look back. I don't know. It seems, I keep on saying this, and I was thinking the cycle was going to break because of the rate hike raises and inflation and things like that. And also there was the theory that cycles were going to lengthen, but that cycles did not lengthen, and the Fed pivoting is sort of in line with when the bottom should be, when there should be that capitulation. So I continue to I'm not going to say I'm a complete, follower of the 4-year cycle. I'm a complete advocate for the 4-year cycle, but I'm definitely becoming more and more of an advocate for the 4-year cycle. But I guess only time will tell, and we're not going to know until it plays out, which is why you can't think of things in terms of cycle, in terms of timing the market. In my opinion, you just have to find the crypto you think is going to go up over the long period of time and just DCA. That's really the way I see it. But wanted to just look at the I wanted to look at the CNBC article about rate hikes. So Fed Chair Powell says smaller interest rate hikes could start in December. This is what K4K alluded to. Federal Reserve Chairman Jerome Powell confirmed Wednesday that smaller interest rate increases are likely ahead, even as he sees progress in the fight against inflation as largely inadequate. Echoing recent statement from other central bank officials in comments at the November Fed meeting, Powell said he sees the central bank in position to reduce the size of rate hikes as soon as next month. He cautioned that monetary policy is likely to stay restrictive for some time until real signs of progress emerge on inflation. Despite some promising developments, we have a long way to go in restoring price stability, Powell said it in remarks delivered at the Brookings Institute. Chairman noted that policy moves such as interest rate increases and the reduction of the Fed bond holdings generally take time to make their way through the system. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring down inflation, he added. The time for moderating the pace of rate increases may come as soon as the December meeting. So Wall Street applauded it. Markets went up. Markets already had been pricing in about a 65% chance that the Fed would step down in interest rates increases to 0.5 percentage point in December, following 4 successive 75-point moves, according to the CME Group data. That pace of rate hikes is the most aggressive since the early 1980s. Following Powell's speech, the probability of a 0.5-point move rose towards 77%. What remains to be seen is where the Fed goes from here. Markets took a more dovish tone from Powell's speech, with the top rate put at just shy of 5% by May 2023, and bets that Fed will cut 0.5 point by the end of the year. So was expected in okay. It was thought that by the end of the year they'd already start cutting. I guess, yeah. So that's interesting. And I keep repeating this. That was the last article I was gonna share. But I do keep repeating this. I do believe that inflation is going to top. It's only inevitable. Prices go up too much. People don't spend, especially when you have the tight monetary policy where money's more scarce and you could earn a high rate interest rate on it, and I don't know, there's various reasons why raising rates is deflationary. So you have the U.S. dollar, the inflation. I think the Fed is sort of waiting for confirmation, because one lower than expected CPI print is not enough to really go dovish. They're probably going to want maybe 2-3 in a row. Or maybe not in a row, but 2 or 3. It's sort of reflexive. So if inflation goes down a lot over, let's say, 2 reads, there is going to be a bounce up where it's higher than expected, or just higher, maybe the next month. But the overall trend is down. You want to see a reversal in the trend. That's really what you want to see. And the CPI was 8.4, but the 2 months ago, and then this past month, the CPI was 7.7, which is a lot lower than expected. I guess we're just going to have to see how this plays out. But I really think everything I think inflation is going to top. And I guess the biggest thing I'd want to say is, I know people don't like to speak highly of the Fed, and there is very legitimate criticism, but there are some people that basically they want to just say everything about them is bad and they're totally wrong and they have no idea what they're doing. it seems, well, I guess, yeah, it seems like Powell is looking a little bit like a Chad right now. I'm not gonna lie, because everyone was saying, I'm sorry, everyone was saying that, yeah, he's just telegraphing. He's not actually gonna be able to raise rates. The economy would crash. We can't handle it and whatever. And he did, and he kept on doing it, and nothing happened. I mean, the stock market's down, but unemployment's still low. I mean, people argue that it takes time to really set in. Maybe that's true, maybe that's not. But I'm saying, like, people like Peter Schiff weren't saying that it would take a couple months after they start these major rate hikes for the economy to crash. I mean, it seems like maybe Powell was right all along. I mean, I did see his interview. He's definitely an intelligent guy. I I mean, you could be critical of all the QE that they did, but does seem like they raise rates and the economy's, cooling off. The question is, I guess, is it sustainable, or are these rate hikes going to be so bad that they're going to have to just resort right back to QE, and just pumping all this money into the economy to sustain it? But I don't know. It's being that they're pivoting now and things aren't, well, it's a sort of pivot. They're not pivoting in the sense that they're going to stop the rates or slash them, but they're pivoting in the sense that they're starting to lower the rate at which they hike. So being that they're doing that, and unemployment's still kind of low. I mean, that is kind of contrary to everything that everyone said. All the people like Peter Schiff and Jim Rickards, that we were going to go into this total depression because the Fed was going to hike rates. But I don't know. I guess we'll see what happens.